QuickBooks Online 2025. We're going to create and populate an invoice form for a sale made on account, populating that invoice form from a bill form using the billable item functionality, which is the thing that's going to pull it into the invoice. The bill form having been created from a purchase order, otherwise known as a PO form, the form used to request inventory from a vendor. I know it's a long story, but it's a good one. We're getting into it here. So get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, opening up the major financial statement reports, which are located on the left-hand side. We want to be in the standard reports in the favorites section, right-clicking on the balance sheet to open a link in a new tab. Same with the profit and loss, otherwise known as the income statement, opening a link in a new tab. Let's tab to the middle, close up the hamburger. We're in the modern view mode these days. Therefore, we're going to select the drop down. I want to see the custom date so I can have a range tab going from 01/01/25 tab, 02/28/25 tab. Display it and then select in the drop down because I want to see the transaction dates in a month format so that we have January and February of 25 side by side. Tap into the right side, closing the hamburger once again, selecting the drop down so that we can see the custom date range. Tabbing 01/01/25 tab, 02/28/25 tab, display, drop down, transaction date in months, closing that. There we have it once again. Let's go back to the balance sheet. We're going to be entering an invoice this time, the form used to make a sale on account. But let's give a quick recap of the story because we tied everything together here from purchase order now to the actual sales process, the creation of the invoice. So let's look at the flow chart. This is a desktop flow chart, but we're using it just for the flow of the forms, which would be good for whatever software we're using, which of course this time would be QuickBooks Online software. So we can imagine that someone came in and they said, hey, look, I want a guitar. It happened to be a Music Stuff Store was the customer. It's like, I want this guitar from Fender, which is a vendor we haven't typically done business with. Therefore, we said, hey, look, we could possibly ask our new vendor Fender for the guitar for you and get a custom guitar for you, but we're going to have a purchase order to do that. So we request from Fender, the vendor, with the purchase order, remembering the purchase order doesn't actually record anything, but is only a request form, which can only be used if you have a significant amount of control or power in the business environment, right? Because they're basically going to ship us the guitar before we pay for it. So they have to have a lot of trust in us in order to basically do that. So we're going to put the purchase order in place, and then we received the purchase order. We entered a bill at that point in time, imagining we physically got the box with the guitar in it, the guitar having a physical paper bill in it. We entered the paper bill into our system, not as a payment form, expense or check form this time, but as a bill, which increases the accounts payable. Now, as we entered the purchase order and the inventory or the bill, we put the client in or the customer that requested the guitar. You don't have to do that all the time. But in this scenario, we're imagining that we bought the guitar for a particular client. So the vendor doesn't care who that customer is, but we still want to be able to track it so that when we get the guitar, we are reminded that we already have someone to sell that guitar to, which is where we're at this point. So we're going to move from the money out cycle, the vendor cycle or payable cycle, and we're going to go to the revenue cycle or customer cycle and turn around and create the invoice from the bill that we have populated using the billable items, remembering that when you're looking at inventory, this functionality is a bit tricky and you have to be a bit careful with it, and I wish that QuickBooks would fix it, but they have not yet thus far, so we'll see where the kinks are at and how to deal with them. Let's go to that first tab once again and just reimagine. If we go down to the, we're going down to the expenses on the vendor side of things, and we entered a bill So now we have the bill. So let's go to the vendors, closing up the hamburger, and let's say that we're going to undo the purchase order as a filter, and we're dealing with the Fender, the new vendor Fender. So let's go into Fender and recall what has been happening thus far. We entered the purchase order requesting the guitar. Now I'm not sure if we actually put the client in there, the customer, but we should have, and you can. And then we entered the bill. So let's go into the actual bill itself. This is what we did last time. And so we actually are going to pay. Now the bill increases accounts payable. You can see that it's linked here to the purchase order. It was created from the purchase order, in other words, and we used this functionality down here, making it a billable item and subject to tax, meaning we want to be able to pull it in to the invoice, and when we do so, apply the consumption tax, the sales tax in the case of the United States. Now be careful here, because the problem with this billable functionality is it's not designed to be linked to the items here. So the items are what we usually use on an invoice to assign the proper account that will be impacted and to assign what the actual sales price will be. And if it's inventory items, it will have a distinction between the inventory sales price and the cost of goods sold. Obviously, when we buy the inventory, we buy it at the cost of goods sold. So normally, if I wasn't using inventory and I was using this billable functionality with the categories, it would say, for example, if I bought supplies that I wanted to use to then create an invoice for the customer, it would pull in the supplies at the cost of supplies, possibly adding a markup if I wanted to add like a markup to it. But it wouldn't normally use an item, and it would just assign it to a new account, which we would assign like billable income account. So here it has an item, so you would think it'd be able to recognize that it should pull in as the item for the sales price. That's where it gets messed up. It's not going to pull in at the sales price. It's going to pull in at the cost, which I would think QuickBooks would be able to fix, but they haven't thus far. Everything else seems to work like you would expect it to, because instead of it being posted to billable income, it will hopefully be posted to the income account assigned by the item. So let me show you what I mean. I'm going to close this out for now. And let's go into where the functionality is, into the cog up top, to see where those billable things are located. We're going to be in the account and settings section. And now we're down at the expenses, and we're in the bills and expenses area. So if I go into that, notice we had marked up prior to this, make expenses and items billable. That is turned on. That's why you have that billable field in the bill form as well as an expense form. So we could have marked up with detail, but we're not going to give it a markup. We're just going to pull it in at cost. And it says track billable expenses and items as income. So in a single account or multiple accounts. So if it wasn't an item that we purchase, a billable item, but like supplies, for example, then it would pull into the invoice, assigning it to an income account, which has already been defaulted to assigned. I believe that's in the advanced area, and it would be going to billable income. But this time we're using the billable thing for an item. So we would like it then to not put the income into billable income, but use the item functionality to record it to the income account assigned by the item, which in this case would be like inventory income or sales. All right, so let's close that out. I'll show you what I'm talking about. So we're going to close that out. And then if I go into the ham boogie up top and we go down to the sales side of things, and we're going to turn around and say, now we have this billable item for Fender, the new vendor, for the new customer, which is New Music Stuff Store. So if I close this out, and we can go into we're in the customers. Let's go into the customers. And then we have the unbilled income. So this is like income that we have to invoice for, or it's potential income that has not affected the books yet because it's unbilled. The unbilled income you would think would be coming in from the use of that billable thing, items, or from unbilled income from like a job cost system for work that was done that we haven't billed out yet, such as in a CPA firm or law firm. So we can then go here and make an invoice from it. So I could go into here and that will then create the invoice. So now we're going to be invoicing new music stuff store, new music stuff, and it'll populate automatically. Now I could, if I close this out and just create the save and leave without saving, por favor, if you would. We could just create an invoice up top and say plus button, make an invoice for new music. We'll type it in here, new music stuff. That's the customer. And then it should populate on the right-hand side saying, hey, look, you got this billable item. Do you want to include that as long as you're including stuff for this particular customer? And we're like, yeah, we want you to include it. Pull that in. Thank you for reminding me. And then we'll close this out. All right, so then we tab through this thing. So now we got the guitar from our new vendor Fender. And so this looks good. We're gonna say then the date, let's make it the 22nd, 4/20. Well, let's make it 01/22/25. Okay, wait a second, this is all messed up. Let's go 01/22/25 as the date. All right, and then it says can't calculate sales tax. Okay, we'll be okay with that. I'll do the sales tax. So boom, boom, boom. So it pulled in the Squire, 20 of them. Tax is being applied. Now I'm going to use our artificial tax calculation of the 5% for the sales tax. So it'll populate that. There we go. So there it is. Now notice the problem is it pulled in this amount at cost. So how can I tell that? Like if I put another one down here, the SQ Squire, and say boom, then the actual rate is 244. So I can just change this so I can easily, if I remember that, I can say I want the link up here. So I don't want to delete this one and have a new line. I want to use this line up here. I'm just going to change the rate to the proper rate, which is the sales price, not the cost, 244, and then it should populate properly. Now, again, I do not see why QuickBooks can't figure that out to fix it so that when we use that billable thing, it pulls in the proper sales price and not the cost, because everything else it seems to do properly. In other words, you would think that this amount, if it was using the billable component, would be assigning the revenue to a billable income instead of what's being assigned by the item. But it doesn't. It's going to assign it properly, I believe, to the sales account, and it should, I believe it's properly tracking the subledger for inventory. So everything else seems to work well, but for whatever reason, it can't see that this is an item and you should be pulling it in not at cost, but at sales price. All right, so if any QuickBooks people are listening to that, I'm sure other people, I'm sure I'm not the only one that's whined about this before, so I don't know, but I feel like that should be a fixable thing, and I haven't seen any reason why that would be why you can't fix that. Now, before I record this, hold on. There's an issue. This should be in February 2/22. Get the date right. Hopefully, I'll put a note in there so you can make sure to get that in the right spot. All right, what's this going to do when we record it? Well, it's an invoice. So what's it going to do? Invoices increase the accounts receivable to sale made on account. It's going to increase the accounts receivable by the full amount, including the sales tax, the 5124. Then the revenue, the sales are going to go up by the amount not including the sales tax, which is the 4880, which is now correct because we had to change it to the sales price rather than the cost. The difference is going to go to a payable account for the sales tax payable to whoever the vendor is that you're paying the tax to. And we know that the inventory is going to be going down for the cost, which was the original amount that was up top that we had to fix to the sales price. And the cost of goods sold, the expense account is going to go up. The net impact on net income is going to be the sales price of the 4880 minus the cost of goods sold. Not only that, but the accounts receivable is going to have a subledger that's going to break out who owes us money by customer, and the inventory is going to have a subledger breaking out the units of the inventory. Also remembering that this revenue account is going to be going to the proper revenue account, hopefully driven by the item of sales rather than what you would expect if it was a billable thing pulled in for something like supplies into an invoice, which would be billable income or something like that. Let's see if it does indeed do those things. So let's save it and close it and go on over to the balance sheet. We're gonna refresh this one, and then I'll refresh it again, and we'll go on in to the AR, the R pirate account. And so there's our invoice, boom, the 5124. That's the full amount. That includes the sales tax, closing it back out. And then we're going to go back, and then we're going to go to the income statement, run it to refresh it, and then refresh it again. And then we've got, see what it didn't put it into the billable expense income. That's what you would think it would do if it didn't recognize that we were using an item, using the item account, which drove it to the sales of products. So it's doing that properly, even though we use the billable functionality for an item using inventory. So there's the 4880. That then is, I believe, the amount not including the sales tax. Closing that out and going on back. Where's the sales tax? Once again, it's on the balance sheet, of course, por supuesto. It's down here in the sales tax payable to the vendor. There it is, right here. It's a 4880, and okay, and there's two of them because there's two sales tax people we got to pay, even though they don't do nothing for us. They still let people rob us, but whatever. And then if we go to the accounts receivable up top, it's also going to have a subledger breaking out the information by customer, which we possibly can see internally instead of generating a report. Let's go to the first tab. Where would we go to do that? We go to the ham boogie. We're going to go down to the sales item, and then we could go into all sales, por ejemplo, closing this up, and we're going to say, let's say that we hit the drop down. Don't hit it too hard. Don't want to break it. I think I broke it. I hit it softly. Oh wait, I'm hitting the wrong one. Let's hit this one. All right, I want to see the invoices, and then on status, I want to see only the open invoices. Boom. So that gives us the open invoices, including the new music stuff, and it also gives us the total of the open invoices, which you would think should tie out to what's on the balance sheet for the total that people owe us. 19,811. Is that what's on the balance sheet? 19,811. It is, of course. Let's go back to that first tab. Well, before I do that, let's also go down and say the inventory is going to have a subledger. So there's the inventory. We also need to track it by unit. For that, we're going to need a subledger report. So let's go back to the first tab, open the ham boogie, go down to the reports, and then I'm going to close the ham boogie. And I believe, let's go and scroll down. It's under the sales and customers. There it is, inventory valuation. Let's look at the summary. Right click, open in a new tab, going over to that tab on the right, and let it think. Don't rush it. Close it back up. So there we have our inventory. The quantity of inventory has been updated, and the dollar amount is now at the 6266. And that should tie out to what's on the balance sheet of the parent account for the inventory. 6266, MUI B to the N. Let's go back to the first tab once again. Open up the ham boogie, back into the sales. We checked out the invoice in the all sales area. We also have it, of course, in the invoices. We might be tracking the invoices here. We got to collect from those customers in the R account, the R, the AR, the pirate account. Hopefully our clients aren't pirates, because pirates are the kind of people that don't actually pay you. You don't want to do business with pirates, okay? They're bad. Anyway, select the drop down. We're going to say we're looking for the unpaid items. Unpaid items. There we have it. Boom. And then let's go on up and go to the customer side of things. And unless it's like one piece, like he's a good pirate, I guess. There's like good pirates or something in that, but only in like that universe. Maybe like, but anyways, let's go into then. So now we're in this one, unbilled. Now unbilled income is now gone because we have now populated an invoice with the item that was in there from the billable item. We've got the overdue invoices and the open invoices. Let's just look at the open invoices. So now we've got our clients that have the open invoices. We're looking at the music stuff store that has that one open invoice. And there it is, boom. Next thing we would do is, of course, hopefully collect the payment on the invoice, completing the process that we started way back with the purchase order, following it all the way through to the bill, to the invoice, then to the receive the payment. All right, so that's where we're stand. Let's check out where we stand right now, because that's where we're gonna be finishing up, making sure that we have an updated, refreshed balance sheet. If your numbers tie out to these numbers, great. We'll pull up the trial balance shortly, which I think is the best form to check your numbers on. But if you want to see the subtotals, then it might be useful here. Let's go to the income statement, do the same thing, hitting the refresh button. Don't hit it too hard. Don't want to break nothing. Don't break the mouse. Mouses are fragile creatures. Let's go to the first tab and let's pull up the old trial balance, closing up or open the hamburger. We want to go down to the reports. Where are they? There they are. Close up the hamburger. Type in trial balance. Trial balance, the good old TB. And I'm going to go back to the classic view because for some reason the modern view mode's got some kinks to work out on the trusty TB trial balance. Then we'll change the range going from 010125 to 022825, selecting the drop down to see it in a month side by side. Run it because we want to refresh it. Balance sheet on top of the income statement. If your numbers tie out to these numbers, great. We're focusing in on the February numbers, which is basically year to date February numbers. If your numbers don't tie out to those numbers, you might want to first check out the January numbers to see if they are tied out, which means you have a February data input problem. And if you have a February data input problem, you can increase the date to a future date in the future, see if that changes the numbers, because it's often a date issue, which is the problem, as we demonstrated with our mistake on the date earlier that we already have fixed. So then you can drill down on the changed number, get to the source document, adjust the date to where it properly should be, which is, of course, February. And the trial balance is the balance sheet on top of the income statement, assets, liabilities, equity, income, and then expenses, assets starting at the checking account, going on down to the contra asset of accumulated depreciation. Then we have the liabilities at the accounts payable, the AP, and that goes on down to the payroll liabilities. And then we have the equity accounts, opening balance equity, going down to the owner's equity. Then the income accounts, we've got the three up top, billable, expense, income, sales, and services. Then all of the expenses that we use to generate the income, including the cost of goods sold, the sale of the actual inventory, if we have inventory, which of course we do because we sell guitars. And then at the bottom, you've got the other income and expenses, the gain and loss on investments, and the interest expense in our case.